The US stock market closed with heavy losses on Friday. Perhaps market sentiment on Wall Street was dented by the poor non-farm payrolls. The official employment data showed that the US public and private sectors added a modest 210,000 jobs in November, much weaker than 500,000 jobs in the consensus. However, monthly employment data needs further reversion. So analysts do not rule out a new bullish wave in the stock market. The S&P 500 are heading lower towards 4,500 points. Now the market behavior will heavily depend on further moves of the Federal Reserve. The actual jobless rate at 4.2% enables the regulator to shift focus towards high inflation and respond with efficient countermeasures. President of the Federal Reserve Bank of St. Louis, James Bullard, said on Friday that the central bank should push ahead with the monetary tightening. Let's wait for a new inflation report for November, which is due this Friday. It will certainly take center stage this week. According to flash estimates, consumer inflation was at the levels of 5%, or higher last month. Meanwhile, the regulator has not unveiled any decisions yet, so the equity market is able to grow a bit and switch to a trading range. Having lost 0.8% on Friday, futures on the S&P 500 are carrying on with a decline, now trading at near 4,539. The index is expected to dip to the target level of 4,500 points. Soaring inflation is sure to be high on the agenda at the Fed's nearest policy meeting, which is taking place next week. The US CPI and the Fed's policy decisions are of major importance to the US dollar. The greenback opened this trading week with a moderate growth. Its index climbed to 96.25. The index is likely to get stuck in the current range between 96.00 and 96.60 until the Fed's policy meeting. There is a slim chance that the US stock market will develop a new large bearish wave. The USD CAD pair sharply reversed upwards on Friday, indicating a further climb. Now the currency pair is trading at near 1.2820. Apparently, the USD CAD pair is set to grow further. The expected corridor is between 1.2780 and 1.2860, unless oil prices extend the bullish trend. By the way, oil rebounded 2% on Monday. Market participants are wondering about the reason for such a nosedive of Bitcoin price. Since Friday, the flagship cryptocurrency has slipped to $48,000 with a brief dip as low as $46,000. For now, the crypto is trading sideways. Bitcoin tumbled on Friday in response to a plunge in the United States stock market. Amid the broad-based strength of the US dollar, risky assets are making a downward correction. And Bitcoin, alongside altcoins, belong to risky investments. The US dollar asserted strength in light of the Fed's hawkish comments. The regulator sent a message that it could raise interest rates ahead of schedule next year. Moreover, monetary tightening could be more aggressive with the 2 rate hikes. Amid such remarks, the US dollar advanced against other major currencies. That triggered a downward correction in the crypto market also. And no one doubts that Bitcoin price will recover again to $55,000 or $58,000. The market is in limbo due to the Omicron variant, which has been detected in 16 states in the US. The country has the biggest toll of infected people now. There is no precise information on the new strain. It's known to be more contagious, albeit with a much lower mortality rate. Meanwhile, congressional lawmakers are fighting for a few bills, including the defense budget bill, the pro-democratic package on budget spending worth $2 trillion, and a new federal debt ceiling. Democrats are trying their utmost to pass the bills until Christmas. And we will keep you in the loop on all moves in Congress. Stay tuned and see you tomorrow.